Hi everyone, in this video I'll explain how I closed a trade with a 700% profit, but why I think I may have closed that one out too early. I'll also cover off my weekly portfolio update, including 11 closed trades and 6 new trades opened. Hi guys, hope everyone's safe and well. Before we jump into the portfolio and the weekly update, I just wanted to obviously stress that this video is by no means intended as financial advice. The contents are my opinions and views of the market only. So let's jump straight into the portfolio. We'll do a quick roundup, and then I'll jump into the positions that I've opened and closed. So as you can see, again, strong start to the year, up almost 11%, which is a great return. I know that the markets are fairly bullish at the moment, so a lot of people are probably making a lot of money. But 10% start to the year, or just over 10%, is a brilliant start. So if we go to the closed trades for the week, we've got 11 closed trades. One was closed slightly in the red. This one, I've entered into it just above a support area. It's not moved in the direction that it looked like it was going to. It's broken back down that support area, so closed it at a very small loss. No point holding on to it if I don't believe it's going to go anywhere. The others, so you've got American Express closed at a profit. Intel, this one could have actually been closed at a lot higher. I don't know if you may have read about it, but they had their earnings release on Thursday after market close, and it actually got leaked. The financials actually got leaked. I think it was 6 minutes before the closing bell. So there was a massive push up. I think at one point we were 25% up on that position. And you hear the old cliche, buy the rumor, sell the news, and in this case it did turn out to be true, because the next day it absolutely tanked. So not to worry, I don't trade the news, so the reason I closed out of this position was actually because it had hit channel resistance. So yes, I could have closed at 25% profit, but we still come out with just under 18% on it. It's not the end of the world. So there's a few others that we've closed out, and obviously the big one, the title of the video, Jumia, which we closed out at 700%. So let's jump into that one straight away and just go through that one in more detail. So I'm just on the weekly chart, just for now, just so I can show you where I initially bought in. So it was back in June last year, and we bought in just on this bullish candle here, around about 5. So you could see the bullish candle just starting to bounce off almost on a trend line that was developing, but also breaking above what was a previous support area, a resistance area. So we got in on that one, and we've pretty much ridden it, held on to it. It was a one with a long-term view, held on to it for quite a while. I was probably intending to hold it for longer. I think the company's got great potential. If you don't know too much about it, it's been touted as essentially as the Amazon of Africa. So it's like an online e-commerce site, which the target market is in Africa. So it's in various countries on the continent. Financially, it's still not really turning a profit. There's a lot, like I say, there's a lot of potential there, but I think one of my reasons for being a bit wary and not holding it for too much longer at the moment was because it's sort of turning into pure speculation. And when it gets to that sort of stage, that you hear the old Warren Buffett quote that, be fearful when others are greedy, and be greedy when others are fearful. And there was a sense of that with this trade. It got to a point where I'd made a significant profit on it, 700%. And it was, as you can see here, from November last year, it's been on an absolute tear. So I did decide to sort of sell into strength on this one. And I'll tell you why I think we did that. So I've just switched to the daily charts. I know I've mentioned I do tend to use the weekly charts. It's a longer time frame. You get less volatility, or it streams out less of the volatility. But one of the reasons why I was looking at the daily chart, like I said, I started to feel a bit uneasy with it. because of the sort of significant rise. And previously, it knocked around a resistance area of around just under 50. So you can see it here on the daily chart. If I zoom in a bit, this was back in 2019. Beginning of or middle of 2019. So it knocked around there before, been rejected, hit new lows, and it's been on a really large tear since end of last year. But what sort of caught my eye was it tested that previous resistance area, flat out rejected it. As you can see here, a lot of bearish candles, rejected it, had another run up, and then as of this week, you see a bearish engulfing there just on resistance, a hanging man, which is where the basically the sellers sort of joined the party and pushed the price lower. Then it pushed its way back up. Normally, when you get sort of candles like this, like a hanging man, it's called, with a small body and a large wick at the bottom. When you get that at the top of a move around resistance, it's where people are looking at, sort of taking profits, and they're thinking it's going to turn over lower. So the fact you've got that and a bearish engulfing candle and then another bearish engulfing candle, that to me was warning signs. And before this one closed out, actually, I closed it on, I think it was on the Wednesday or Thursday. This was actually also a bearish move. So I didn't feel comfortable. I felt like it was going to roll over, potentially also forming like a double top here. And I was wrong, basically. The long and short of it was, as you can see, the next day absolutely smashed through that $50 mark, pushed up, probably hit a load of stop losses on the way. I imagine there's a lot of people shorting it around this resistance area. So, is it a move to try and catch out some short sellers, a bit of a short squeeze? Who knows? Am I bothered about it? I was at the time. Everyone wants to make more money, but I think when you look back on it and think, okay, I've made 700% on this trade, which is an awful good return. I've stuck to my strategy. From a technical standpoint, the bearish signals were there, so I took the profit, no problem. If it then retraces back down to this area and it turns into a support area, we can look at re-entering, so it's not the end of the world. But I've got to do what I'm comfortable with at the end of the day, and you've got to stay, you've got to stick to your strategy, stay disciplined, and that's exactly what I did. So yes, it would have been nice to still be in the trade. I think I probably would have made maybe another 30% on top of that. But when you look back and think I've got a 70% trade closed in profit, I can't really argue with that. So that was the thinking behind Jumia. If I go through the other new open positions for this week, the first one is First American Financial, which is a US financial services company. Similar to a lot of the trades I covered off last week in my video, this one's got a fairly strong trend line dating back sort of 2016, 2015. You can see the reactions. This is on the weekly chart. You can see the reactions here. Again, another drop in March last year when COVID came in. And then since then it's been recovered and it's been bouncing around this trend line, respecting it quite nicely. Probably could have got in last week when it had the bullish engulfing candle here. Again, you can see here it's pushed up and then retreated slightly. I think there is a slight little area of resistance here, around, where are we? Just around 55. So, we've taken a position on this because we've got a bullish engulfing candle here. So you've got a lot of consistent bullish engulfing and bullish candles on this support trend line. So I've gone in on this one. We might turn back and bounce again off here before we then break higher. So that's fine. So I'll just stay in that one for a while. But that was one of the positions that we've opened. Another position that we've opened is in Amarin Corp, which is a US public utility company. Again, similar story on this one. It's been following a trend since 2015. So you can see it's touched there, bounced off there, each time respecting that trend line. Obviously, when COVID hit last year, it broke below, but immediately the next week it broke back up again, significantly. Just going to zoom in a bit on there. And then again, bouncing here, and then this one. So we've broken lower. Now this one, it's not that a convincing candle, if I'm being honest. I think when I initially opened the position, it had pushed up quite higher, so it was almost like a new low, and it had closed on the higher, which is what I would have liked to have seen it close as, but it did retreat slightly. So it could be that the next week or the next couple of weeks it does fall lower onto this trend line, but I'm fairly confident that we'll respect this trend line and it will bounce back up. So we'll stay in that one for a while. And again, this one could push up, you know, well into the 90s. You've got another resistance area around about just under 90, 87 maybe. So that could be a nice trade from sort of 70 odd up to 90. And then, you know, we could hold that. If that breaks higher, who knows, that could just carry on going up. So we'll stay in that one for a while. The next company that we opened a position in is Co-Diagnostics. So this is a molecular diagnostics company. Now, as you can see from the chart, there's not an awful lot to work with. It's one that had only been recently added on Etoro, even though I think it IPO'd in 2017. So it's been around for a while, but it's just recently announced that it sold over 10 million of its Logic Smart COVID-19 testing kits to laboratories, hospitals, and other sort of associated places around the world. So it's heavily involved with COVID testing, which obviously, you know, worldwide pandemic is still ongoing. Testing kits are going to be in demand. So with that in mind, and looking at it from a technical perspective, you know, we've seen it's hit an area of around about 8 after a big sell-off last August. It's had a huge sort of bounce from there. Then it's retested that area, or just slightly above that area, and we've had a bullish engulfing candle. And then we've also had another strong bullish move off. So I've taken the position once I've got confirmation that it's closed above that. So bullish engulfing, a hammer pattern. It's called a hammer pattern. So you've got a long wick, but it's closed higher up with a small body after a move downwards. So we've opened a position here. It could be, I don't know if you've seen, I've marked out a sort of a channel here. Could be like an ascending channel. It could also be looked at as a double bottom. So you've got the first bottom here, then you've got a retest of that bottom here. So we could see this one bouncing higher. So it is a slight risk because obviously there's not much to work with from a charting perspective. But I like the fact that the company's involved in the COVID testing space. I think obviously there's going to be a lot of demand for that as they continue to fight the pandemic. The next company is Salesforce. So obviously quite a well-known company. If you don't know, it's a US customer relationship management company, all cloud-based, absolutely huge company. It's one that I use myself at work, so I'm fairly familiar with it. As you're probably aware, the technology stocks since last year, really, March, April time, a lot of the technology stocks have been on a huge sort of bull run. Some of the valuations are wildly excessive. CRM's not been too bad, but I have been looking at an opportunity to get into it. So just quickly, again, trend line here since 2016. It's been respecting that trend line up since, you know, for the last sort of 4 or 5 years. Bit of a jump down when COVID hit, and then everyone piled back in again. And as you can see, a huge move upwards. And now we're seeing a retracement, probably people taking profits, maybe shifting to sort of value stocks now that things around COVID are becoming a bit clearer. But what I've taken is a position opened just here. So it could be, I may have gone a little bit premature on this one, I'm not going to lie. I think there probably is a bit of a resistance around 200, but just this bullish engulfing alongside this sort of strong bullish move here, it just tempted me into a position. So it's one of those ones where if I've gone too early, it's not really a problem because it's a great company to have in portfolio, strong fundamentals. You know, it's a growth stock. It's one that's going to continue to do well. So look, if it rolls over and it falls back down towards the trend line, then okay, I've gone early on it, but I'll just hold on to it. It's not a problem to me. I may even look to add to it, to be honest, if it drops further. It really is a strong company, and one that's going to continue to do well. So no problems with that one. But I just saw the opportunity and took that. So no regrets on that one. The next one is probably a little less well known. It's called Sobi, which is a biopharmaceutical company based in Sweden. Again, I mean, one of the reasons I've gone in on this one is, I mean, look at the consistency over the years of this trend line. So since 2012, so you're talking nearly 9 years, or over 9 years, of consistently following this trend line. And we've basically taken a position, if I zoom in a bit. So you see some reactions here. There's a bullish engulfing candle there. You've got a hammer candle there, followed by a bullish engulfing, another strong reaction there. Then it's retraced slightly. And I think at the time of me entering, this candle was actually going to be a bullish engulfing candle. So it's actually opened up above the low and finished just below it. But I think this one's got potential to push much higher. I mean, it could even go past, where are we? Past 290. So yeah, a company that's doing really well. And when you look at the fundamentals, I mean, I don't tend to cover off fundamentals in these videos because it's more technical analysis, but year over year revenue growth, strong balance sheet. Yeah, strong. The fundamentals look strong. So, you know, it's a company that I'll probably have, and I may hold this for quite a while. And then the last stock, which I've opened this week, is in Takeaway. Again, there's not an awful lot of chart data to work with here, but there's enough for me to be tempted into it. So Takeaway is an online food delivery service, mainly operating in the Netherlands and Belgium, but it's got operations all over Europe, and I think it's Vietnam. It's got a presence in Vietnam as well. This one's quite interesting because I opened a position on Friday after this strong sort of bullish piercing move off of resistance, off this trend line resistance. So just to sort of confirm the trend line here, you've got a bounce there, you've got a reaction there, it's broken below and it's stopped below the trend line, it's broken through the trend line, it's touched it again here and bounced up, and then you've got this huge sort of bullish move here. So I took a position open in this, and then since, I think I read it this morning actually and put a post up on Etoro that Tiger Management Global, which is one of the large US hedge funds, they've also taken a huge position in this, which to be fair is probably why this is so bullish here. I think they now own 4.4% of the company, and it equates to the stock purchase that they took up, I think was something like $750 million worth of shares. So clearly they're quite bullish on that, which is, you know, it's never a bad thing to have the big hedge funds on your side. So this one, you know, this one could push significantly higher. There's a bit of resistance around $100 mark, but it's broken that before. So, you know, we could see this making all-time highs, 115, 120 and beyond. So that's another one that will be in sort of mid to long term. Yeah, and I think that's all of the open trades for the week. Like I say, if there's anything that you want me to cover off, if you want me to go through my closed trades in more detail, I can do that. Or if you just wanted to sort of pose any questions you might have on a stock or a particular stock that you're interested in. I've got a lot of stocks in the portfolio at the moment. I do a lot of analysis. I think I have, on average, there's about sort of 650 to 700 stocks that I check through every week. So I do a lot of analysis. So if you want to put any questions to me, happy to answer them. If you wanted to copy my trades, you can do so on Etoro. The link is in the description. Please also like and subscribe to my YouTube channel to stay up to date with my weekly portfolio updates and any views that I have on the market.